All I see is dollar signs and niggas.
Good evening, good morning, good afternoon, whatever time it is, wherever you're at. But welcome to the stream, right? Welcome to the call, welcome to the boot camp, right? How's everybody feeling, right? We got 12 people on here. Keep sending the link out to everybody that you guys know will take something away. We don't want people that are not going to be taking notes, people that are not going to be applying, right? Drop some likes too. I want to see at least 12 likes, right? There's 12 of you guys on here, every single one of you guys. I want you guys to drop a like right now. Like I said, this is something that, truthfully, the likes help a lot with the channel, the algorithm, right? So there's that. But then there's also the fact that I really don't have to be doing this, and I really want to. So just this one thing, if you guys take anything away, if you don't take anything at all, right, the support just still means something. But in terms of that, if you guys are here, you guys understand that we're here. We're ready for lesson number 2, right? I see we got some Toronto, some Houston in the building, right? Kansas, right? What's going on, gang of Trony? Papa with that 30 Russell Westbrook, homie. Scrap the lyrics for a second. Feeling blessed and abundant. What's going on, family? Right. So today, if you guys weren't on, I want to say yesterday, but it was Sunday, right? If you guys were on Sunday's call, then you guys understand what we went through on Sundays. We're really just gonna be kind of picking back up where we left off. We went over just a very basic accumulation lesson, and today we're really going to be starting with our distribution. Okay, so first and foremost, we're really just going to take a look at this chart, right? This schematic. So if you guys are not familiar, and if you guys weren't on Sunday's call, I highly recommend after this one to go watch Sunday's call. It's going to be in the live section, right, instead of the videos, right? You guys will see Wyckoff 101 or Wyckoff lesson 101, right? This is going to be the part 2, so I'll probably put in the description accumulation, and then I'll put obviously distribution for this one. But really what we need to do is sit here and just really dissect the same way that we did for schematic 1. So if you guys were on for accumulation, if you guys were on Sunday's call, right, drop a 1 in the chat if you guys would say that the way that I simplified it, it made sense for maybe those of you that struggle. Because I feel like we overcomplicate things because we expect things to look exactly the same as this chart that we're looking at right here. But in reality, it's going to look similar, and there's going to be just common denominators. There's going to be certain things that do occur over and over again. But what we do have to understand is, for the most part, the in-between, and I think that's where a lot of people get caught up in, the in-between is the reason why they end up getting clapped. But the reason why we want to take a look at this as well is to really dissect the reason why a lot of us lose trades when we're too early. Like, drop a 2 in the chat if you ever entered a trade and you were too early, right? And you were trying to sell. So you were looking for shorts. Let's say you were selling gold, you were selling Ethereum, you were selling GBP, USD, whatever you trade. You guys know that we really like the volatile stuff over here, right? We're not too really concerned on the Forex side, right? I like commodities, I like indices. That's just me personally. But I can see with the 2s coming in that there has been people that have gotten in on shorts too early. So what we have to write down, right? The reason why you got hit out, and this is what you need to write down, is because you entered in either phase A or phase B of distribution. So that is literally 90% of the reason probably why you lost, right? The other 10% could be maybe the other technicals that you had were just wrong. Maybe you identified the actual distribution wrong as well. Because I know that's probably one of the hardest parts initially, is being able to identify it, because you're going to sit here, and even for the accumulation, sometimes you guys are just looking for that first little pop-up, and it's like, it didn't even give us that smaller time frame break of structure. It didn't even give that real valid confirmation that we're offering buys now, and people are just so quick to just mark certain things up, and we kind of do it wrong sometimes, right? And the reason why we know it's wrong is because typically it doesn't play out. Because if you really were to enter a phase C and you were entering in the test, or if you just understood what to look for in the UTAD, you could get up even above the test, right? What I'm going to try and teach you guys how to do is to be able to enter basically at the top of the UTAD. You're not necessarily going to be able to catch the top unless there's some alignment and confluence with the price action that we're playing off of. But for the most part, you could get in virtually at the top. which is going to allow you to break even before the test, which then will allow you to just have the most safe entry. Okay, so just initially, obviously with us taking a look at that to begin with, right, what we're going to do is kind of, I'm going to give you a little cheat code version, right, same way that we did yesterday with the accumulation, and we're really going to sit here and we're going to just really break it down in the same way that we did yesterday. But now we're just, or 2 days, I keep saying yesterday, the same way that we did it 2 days ago, except this time, obviously, what we're going to make sure we're doing is distribution, right, instead of the accumulation. So this is typically what's going to end up happening, right? So typically, the same way like how just before the distribution, or before the accumulation, right, we obviously get a big fall, right? Okay, so looking at this initially, right? If this was like an hourly perspective, right, with how we're looking at it, I'm going to change this just a little bit. Bomba. All right, boom. So now taking a look at this, right? What we really have to sit here and identify, this would be like an after the fact, right? Because like I said, we're going to go through a real life example of this. But really what I'm doing here is just getting your eyes to start getting used to seeing kind of, think about it as like the frame. So in a vehicle, I want you to close your eyes and imagine, right? It's like in a car, imagine whatever car you drive, whatever car you've been in recently, right? I want you to visualize and just imagine, all right, boom, I'm in this car. It's like the seats and all the little mirrors, steering wheel, all that stuff, like that is not going to make or break whether or not your car drives, right? Or functions. Okay, that's all interior stuff that just will make your trip more enjoyable, maybe more comfortable. But it's not going to determine whether or not your car goes, right? So what we have to sit here and understand is what distribution and accumulation will be like is a bunch of different levels and different parts. And you just have to dissect, okay, which one is actually going to be very fundamental? All right, the engine. We need to sit here and focus on the engine because the engine is going to dictate whether or not, all right, our car even turns on or not, right? There's a lot of other things that are going to be more important than maybe what color seats you have or just what type of steering wheel you have. Like there's certain things, like I said, that are just going to be more of importance. And one good quote that I heard that you guys should write down is you always want to do first things first. So what is a first thing? You're probably like, Cash, what is a first thing? Well, the first thing basically is something that you don't think you should be doing. It's not like if you know you should be doing something, it's not what you think you should be doing, right? It's not what people want around you to be doing. It's not what anyone outside of you knows you should be doing. Like basically what a first thing is going to be that first thing, that first action that's going to get you one step closer to your goal or one step closer to whatever objective and target that you have. Okay, so that's what a first thing is. So if your goal is financial freedom, financial literacy, the first thing to do would be educating yourself on how to learn, because most of you don't even know how to learn properly. Like the issue is not the education. The issue is you don't know how to sit here and be a student for 5 to 6, 7, 8 hours a day. The reason why you are in the position you're in versus like someone that's a multi-millionaire, right? The multi-millionaire is educating and studying longer than you are. You might think an hour of personal development a day is good, but what happens if someone's doing 3 hours, 4 hours of personal development a day, and then they're applying for 3 to 4 hours a day the information they just consumed into real world experiences, right? That's when we start to notice a difference, okay? So initially, kind of like the frame, like I said, the engine part that we really want to start being able to identify is going to be some type of break of structure. Okay, so this buying climax that we get, right, in this particular schematic that we just drew up, right, this right here is going to be our buying climax. Okay, so our buying climax, the reason, like the way that I'm able to sit here and identify, I'm not going to say everyone, but the way that I sit here and I'm able to identify the buying climax, like I don't just identify the buying climax as soon as we start to fall down. We have to break structure on 15-minute at least a 15-minute. If I'm looking at a smaller time frame distribution, then whatever time frame I'm looking at, price to enter on, it needs to be a break of structure on that time, right? So in this particular case, this is actually where we get our break of structure. Okay, so we get our break of structure right here, right? We create a new low. So remember how I asked you guys, like, have you ever got hit out early when you tried to sell? So have you ever sat there and tried to sell after a break of structure towards the downside, and then you tried to play this last up candle before we broke down? Have you guys ever tried to do that? Because that's probably most people, right? And what most people probably do is they're not entering probably at the top of this candle, right? Because they're not taught to do that, right? I teach my students how to do that, right? Position themselves at the top of the candle. I'd rather miss a trade that's not going to give me a higher R&R than to potentially catch a trade that's going to give me a smaller R&R. Like, a small R&R to me is like a 1 to 3 or like a 1 to 4. Like, to me, like, that's nothing. Like, a 1 to 5, okay, cool. I could live with a 1 to 5 because, shit, it's 1 to 5, right? But for the most part, I'm looking for 1 to 10s, okay? So a lot of people would sit here and they would enter off of this break of structure to the downside, or so they would think it's a break of structure. It is a break of structure, but you don't just want to play every single break of structure, because a lot of you play break of structure and you lose because you sit there and you're like, damn, we just closed below this low, but then now we made a new higher high. How does that make sense? It's because why? You sat here and you really got baited, right? You got caught with that little head buzz, okay? So now the next part that you really want to sit here and you want to be able to identify, right, is going to be the upthrust. So the upthrust, the reason why I kind of did it like this is because it's going to sometimes be a little messy in the sense of we'll get this first initial push up and people might think this is the upthrust, right? But what you have to sit here and not get baited into is as soon as we go close above the buying climax, you can't sit there and just because we start to fall down a little bit, you can't expect, okay, cool. Like, that's it. Because for the most part, like I said, you want to look left to get right. So what you want to be able to do is identify, is there an institutional area? Is there an imbalance right above this area? Because you might identify this is your upthrust, right? But in reality, like I said, this is something to me that based off of just, do you see how, boom, we go from here to just basically straight down. In this instance, we kind of staircase walk our way down. When you look at the buying climax and then you look at the upthrust, right? The upthrust, what does it do? Boom, drops, and then it really consolidates, right? So you want to see more price action develop. Distribution, like I said, what you have to train your eyes to understand is that there's going to be liquidity, right at the bottom of wherever we're distributing above, and it's up to you to be able to identify, okay, like in this particular instance, right? We sit here and we look for liquidity, right? This right now is some equal lows, right? So what can we start to identify? Okay, well, shit, we have targets now for us to actually now take ourselves down to. Okay, so in this particular case, like I said, this would be our upthrust. Okay, so once we get our upthrust, like I said, we might come down and make a new low, we might not, right? In this particular case, we just basically made an equal low. It maybe went a little bit lower. But the UTAD, what's going to end up happening, like I said, is we're going to kind of consolidate, and boom, we're going to explode up. Okay, and that explosion up, this is where I say, once we get that UTAD, basically, anything that pushes above the up thrust, to me, I will look for a 1 minute or 3 minute break of structure right away to position myself in. Because I'm not just going to guess like, oh, fuck, it should stop here. I'm not going to guess. I'm going to sit here and I'm 1 minute break of structure. Especially once it takes this up thrust. So once we take this UTAT or this up thrust, right, in phase B, to me, now this is where I'm looking for that 1 minute, 3 minute, 5 minute break of structure. Whatever fill I can get above the test, that's where I'm looking. Because when we sit here and we identify, okay, this UTAT, a lot of people sit here and they think, oh my gosh, like if they miss this first push, or if they miss that first little momentum that we get into whatever area, they feel like they're going to miss a trade. But in reality, what you're going to have to start to identify is we're always going to come back to the up thrust, right? So what would this be a representation of right here? Well, I'm trying to decide what color we want to make this. Let's do red. Okay, so test 1 is gonna come back virtually towards that up thrust. So sometimes, like I said, it's gonna wick a little bit above, but where your safety net then comes in is that if this is a valid up thrust after distribution, you have to understand that we will not come back up above here. Like we shouldn't. We could wick, but we're not gonna get a close above that area. And to be honest, like if it is a wick, it's like that's some real manipulation shit. Because for the most part, like I said, the tests are very clean. So this right here at the top, right, is highest risk. That's where your highest risk would essentially be, right? It would be up here if you were to be risking and looking for just potential areas to put your stop loss. Okay, and then where's your target? Well, your target is this liquidity. But you have to notice, right, after this first test, we're actually virtually, like I said, virtually every time we're going to come back to this buying climax. And we're going to tap this too. Okay, so that's where test number 1 and test number 2 is. And what we have to understand is we're going to sometimes come back and we're going to test it a couple times, right? So you have to expect almost an immediate test. But then where my safe, and I feel like the highest risk, lowest reward scenario comes is that later test when we come back on like the higher time frames and we test that area again and we kind of sweep out the first people that came. It's not to say that we're going to go higher than that area. It's just to say that we're probably going to come back to the same area. So most people who got in late will get hit out. Okay? So test 1 is going to come to this up thrust. Test 2 is going to come to this buying climax. So what do we look for again before we can even really validate a buying climax? Well, we want to see a break of structure at least on the 15-minute, 30-minute, hourly, right? And we know it's a valid start of distro when we get that break of structure. And then we immediately push back up and we create a new high after making a new lower low, right? Because that invalidates the structure break. So by doing that, what we're then able to do is identify, okay, this up thrust, right, after distribution, right, or this up thrust, then is going to start to create more price action, more liquidity. It's going to start to consolidate. That's where most people are going to be baited into not only just selling, but also buying, right? Because we're going to end up pushing above this up thrust, and once we do that, people are probably baited to buy even more, right? That breakout or that break and retest, whatever people really be trading, all these retail methods, that's what they're going to be looking towards. Okay, so now that we kind of did this, okay, like I said, this to me is like a very simplified version of this. It's literally the exact same thing. It's just my little perspective, right? And I gave you a little couple tweaks and pointers and things to look out for that just will probably help you guys out when it comes to ensuring the longevity in your positions, right? So even what we were looking at last week, right, or not last week, on Sunday, right, we were looking for an initial push out of this area, which was clean as fuck, right? This initial bounce that we got out of our area was like 70 points, no drawdown, right? Ended up getting hit out break even. To me, I haven't traded since then, just because once we broke below, it's just you have to give price room to develop and create more price action before you really get back in. But, you know, that was a prime example of how you could have even got in on a trade using the same accumulation fundamental, right? on the smaller time frames, because if you guys want to go back test, this is your homework for the next call. Go back test Monday on the 1 minute time frame and see the accumulation on the smaller time frame and see how you could have literally caught this quick little 70, 80 pip move within all of this price action, right? So in terms of everything, okay? So really what I want to do, this example that I'm going to be giving you guys, the reason why I'm going to give you guys this example is because I caught it out live on YouTube. So if you guys want to go back to my channel and actually watch from the date that this occurred, once we go through this breakdown, it'll make a lot of sense as to why, like I said, this was something that we did on a live trading call. So this is not just something that we sit here and we look at this and we mark it up. Like, no, like we real life apply it to the markets, and what we have to sit here and be able to do, right, is be confident in what we're looking for when it comes down to price action. Okay, so the 4 hours really the cleanest in terms of just positioning. But like I said, initially what you want to see to identify your buying climax, which in this case, this is going to be our buying climax in this particular scenario, right? And I want you guys to actually go dig down and identify why, because on the 4 hour, you're not going to see the break of structure, but on the 1 hour, there is a break of structure, and on the 30-minute as well, okay? So this, like I said, once we got this first push down, on the 4 hour, it looks like, damn, we just filled imbalance and we drove higher. But on the 30-minute, 1 hour, and even 15-minute, we actually broke below our previous higher low. And once we did that, we actually, then what? Created a new high. So this new high, like I said, is going to be that up thrust. And the reason why we're going to be able to validate it is our up thrust is going to be simply because of the in-between. You want to start to see price consolidate, right? Which is exactly what we did. Because now if we sit here and we look, okay, doesn't this look a little bit similar to exactly what we were just looking at, what I just drew up, right? It was virtually the exact same thing, right? We start to create liquidity. We start to create targets. Like I said, we create a little bit of consolidation. So we do offer buys and sells, but overall, what ends up happening, right? We consolidate, consolidate, consolidate. Then here, explosion up, capture all the highs, little pullback, whoop, explosion higher, right? What ends up happening at the end of phase B, right? Consolidation. Notice how we consolidate, boom, explosion, okay? So now what we can identify this as is our up thrust after distribution. So like I said, when you get that up thrust after distribution, typically what you want to do to identify just the start of that initial breakdown is going to be 1 minute, 3 minute, 5 minute break of structure. But the important thing to note, like I said, is even if you miss getting in at the top here, like I said, what you have to do is wait, right? Patience is key, because if we sit here now and wait, okay? So if we look at this up thrust, then we look at this buying climax. Actually, we look at the buying climax after. But just initially looking at this, okay? Right? One thing that you could really use for confluence, right? Just looking at price where it is right here. We have equal lows right here. So what do we have? We have targets. We have just basically a pocket of money. We have like a week's worth of people who bought this support. This literally looks like a support. Retail would have been winning if they were buying right here, right? So we have that support. People are buying. It's very easy to identify, okay, to get into this area, and it's going up. So for basically 2 weeks, we did that, right? A week. So after that point, we created all of this liquidity. Like I said, what ends up happening? Well, we get this up thrust after distribution. How do we identify that? Well, we get a close above the UTAT, okay? Because when we sit down and we break it down to the line graph, it's not as messy. Like I said, the wicks are really just used as a distraction. They're used to distract you from where price is really going. Like, if there's a giant wick to the downside, that's probably to distract you from the fact that we're going to go to the upside. So you're sitting there like, damn, that wick is scaring me. I don't want to buy it. But then in reality, that wick just ran liquidity, just mitigated. It may have just tested an area as well. And that could be the fundamental area that would make the difference in your trading. But one thing I want you guys to notice is after this upthrust, after distribution, boop, 4-hour break of structure. Okay? Right here. So that 4-hour break of structure now is extra confluence that, okay, this distro is valid. Okay? Because when in reality now, if we sit here and we're looking at this upthrust, right? If you were to sit here and, like I said, take a position off the upthrust, and like I said, having your stop all the way at the high is literally a safety. That's just you being like super safe, not having to care. But in reality, it's like you're not typically going to have to put your shit all the way at the top. Like you're typically going to get away with being able to put it, to me, I like to put it on top of the body of the candle. Unless it's a really big body, then I'll sit there and I'll play it a little bit tighter just to split up the entries, right? But if we sit here and we just take a look at this, right? From this upthrust, and like I said, this is having a very, very conservative stop loss. This is literally a 90 pip stop loss. When have you guys ever hopped on my stream and seen me call out a trade with over a 10, 15, 20 pip stop loss? Right? Never, right? So if we really sit here and we're able to break it down, let's say even to like a 60 pip stop loss, which like I said, this is being very conservative, very safe. This is you not having to worry about anything, right? For us to get this test off this upthrust, right? Just taking a look at, boom, where price comes to. Do you guys think it's a coincidence why price literally comes coincidentally, right? The upthrust lines up with an imbalance that we have literally created in between the midst of us actually getting all of that bearishness, all of that sell side momentum, right? So not only did we break structure here, we had an imbalance, which we came back and filled, right? But a lot of people would have been looking to play price higher, right? And that's where a lot of people get got in the sells. You guys want price to come all the way back up to the top. On buys, you want it to come all the way back down to the bottom. It's like that's not always going to be the case, especially if you're getting in phase C and phase D, okay? Because now if we sit here and we look at the buying climax, right, it's no coincidence that, boom, this first push up hits our upthrust. Then immediately we're trading, literally, we're trading all through this buying climax, right? But we also get a 4-hour or a smaller time frame break of structure in here as well, right? The 30-minute hourly broke back down, right? So in reality, it's being able to align the confluence of not only this upthrust, and like I said, the biggest mistake most people make is by identifying their buying climax, right? So if we sit here and now we dissect into the hourly, right? So hourly wise, taking a look at just everything that occurred, okay? So overall, right, just with even this little price action in here, this whole little shebang in here is really where I was looking at the break structure, right? Just with how everything kind of, just with this last up candle, whoop, how we broke down. Once we closed below this, came back, tested, whoop. So to me, like I said, on the 15-minute, 30-minute, this is where we initially started getting that bearishness, right? But what we have to expect, like I said, is price to actually come above here. So it's not that we're looking to sell. It's just we're looking for signs that, okay, potentially the next push up is going to be our upthrust. So that means if we, get another push back down and then take that high, that's more than likely going to be the start of our phase C distribution, right? Which when we sit here and we look at this whole upthrust, just this whole area, like I said, you could have sat here and you could have played hourly insufficiency, right? You had an hourly candle right here, right below this insufficiency. So there was a lot of institutional just concepts that you could have applied, and I'm going to be going through the institutional concepts a little bit more in depth this week. Like I said, Wyckoff is going to be just the engine. The institutional concept is basically going to be like the add-on. So it's not even going to be the interior, because it's going to be just as important, but it's going to be like, instead of having like a stock engine, you have like the most exotic, expensive engine that you could buy, like V8 turbo, like just the most just obnoxious shit that you could put money on when it comes down to an engine, right? So this is a good example of just distribution. We even have just distro going on even just within this whole all of this, right? But in between the distribution, we're accumulating. So this to me right now overall, like gold's direction, the way that I would be looking at gold right now, more or less, I'm still looking longs, but I think that we're gonna push deeper into this 4 hour candle. The reason for that is because it lines up with a weekly candle. So in my eyes, weekly wise, we broke above this previous lower high. So as long as we don't close below this low, so this is why I said this is gonna kind of be a big week for DXY and gold, but everything is aligning, right? So weekly wise, to me, daily wise, if we now kind of shrink it down and we look at our institutional area, I'm really looking at any push in between here. But then when we dig to the 4 hour, right, the 4 hour is really where you start to get that first actual, like, this is a candle that you can break down and play, right? Because if we go to the hourly, right, big ass body of a candle. So to me, I would be looking for like a deep pushback into the body of this candle. So more or less, like I would be looking for price to probably come back down to around here before getting a continuation higher, right? And to me, that will align with just DXY as well in terms of the higher time frame. We came back basically to the same hourly area that we initially started breaking down from, right? So the reason why we even got that bullish run on gold, right, starting like last week was because of this DXY breaking down. So on the hourly right now, DXY looks good to continue lower, right? Which means obviously gold would be good to continue higher. And truthfully, it could go from here, right? I really wouldn't even sit here and be surprised. To me, just looking at it more or less from like the 30-minute 30-minute time frame, and like especially the 30-minute now, it's looking like accumulation even in itself. So to me, I feel like we probably take this low because when you're really looking at it, we have liquidity here. Like I said, we have this area right below as well too that we're looking for price to come into. So what we could probably see is something more or less like this, right? So that breakdown might even break down lower, right? But ideally, when it comes to our secondary test, we're basically going to get something along the lines of this. Right, so this is basically what it would be like. If price is gonna, if we do pop up a little bit and then break down and take this low, to me, this is a secondary test. I'm looking at this as our buying climax, right? Why? Because we get that little 30-minute break of structure up here, and then immediately after, whoop, we break down. So to me, this looks like this very manipulative price action because no one's winning on buys right now. Like if you buy anywhere in here, boom, hit out just for it to go higher. Then you're buying all in here to then get hit out. Buying all in here to then get hit out. So it's like, it makes too much sense right now with what we're doing. Because like I said, especially if this happens during like London session today, it would be lovely. So I think this could actually be the start. Like, because what is Tuesday, about to be Wednesday. I think with news for the rest of the week, we're going to get a continuation to the upside. Like that's personally what I think. I think dollar's going to shit. So that's personally what I'm anticipating. Just looking at the weekly right now. Of course, the news events can do whatever the fuck they want. But like I said, the news events is just an excuse to do what the market was already going to do. So this is why it's just crucial to be able to lock in. But tomorrow we're going to be live for live trading at 9 a.m. or 10 a.m. Eastern, 9 a.m. CST, PST 7. So in terms of that, make sure you guys tune in. We're going to be live. We're going to be going through setups on the indices. If you guys have been on before, you guys know we like to trade a lot of NAS. We like to trade a lot of US 30. As well as gold, of course, is our favorite. If you like Forex, you can hop on, you can ask. As long as we're not time sensitive with things, I do take a couple minutes to really just kind of look through anything that people ask for, whether it's crypto, stocks, anything, right? All the markets are the same when it comes down to how they move, the algorithms they follow. So you'll be able to learn and position yourself just virtually in any market that you're looking to, ideally. But in terms of that, family, I love and appreciate you guys' time. But that's going to wrap up just our basic 101 distro lesson for today. Tomorrow, we're going to go more in depth into just some institutional concepts. It'll be the first day of institutional concepts. We'll probably do maybe like 2 days of institutional concepts, and then the last couple of days are going to be probably the most important parts of the whole boot camp, right? So you guys better make sure that you guys are locked in, especially towards the last couple of days. But make sure that you guys continue to not only just share these calls with people in your network, but also make sure that you guys are able to just plug people in that need the value, because there's a lot of things I do for free that a lot of people wouldn't do. So like I said, if you're taking value away, make sure you're plugging people in. Like we have the Humble Riches mentorship group chat, right? The Telegram, right? It is at 386 people, right? Let's get it to 400, right? There's literally 13 people on here. If all of you guys were to invite one person that you know and love that is looking to trade, I'm sure we could pack this shit out and get it to 400. But it just comes to putting your mind to a skill set. Like I said, if you're taking value away, why wouldn't you put somebody else on? Because that's how the universe is going to reward you. The universe is going to reward you not just for learning, because your selfish ass is not going to put anyone on, right? You want to keep all the sauce for yourself. But then in reality, it's like you putting people on might make your life easier, because shit, someone might be able to teach you something, right? Or even if they're not able to teach you something, they might get a result, and who are they going to remember when they're successful and when they're rich? They're going to be like, damn, thank you so much for putting me onto this opportunity. They're going to express gratitude, right? Because they know that if it wasn't for you, that they wouldn't be in the position that they're in. So with that being said, fam, I love and appreciate you guys. I'm going to see you guys at 10 a.m. tomorrow morning live. Catch you guys on